Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us is Charles Allen, CEO of Nasdaq listed BTCS. Charles, it's great to have you with us. Welcome to Trade Talks.
Thank you so much for having me.
You got it. And BTCS was one of the first U.S. publicly traded companies to focus on blockchain technology infrastructure. Tell us more about the company and the types of solutions that you provide.
So right now, our company is focused on next generation blockchain. So we're not really looking at Bitcoin. We're focused on Ethereum, Solana, Polkadot, Kusama, really what Web 3.0 is going to be built on. So if you've heard of NFTs or DeFi, these all use these next generation blockchains, and that's where really all of the developers are focused on. So it's really exciting, to be the only pure play company on the Nasdaq focused on this at the moment.
What is the foundation of your business model and what makes it unique?
So right now, we basically run validator nodes that secure these networks. So we're an infrastructure play similar to a Bitcoin miner, but again, focused on the next generation blockchains. And we're building a platform, a non-custodial platform to allow others to delegate and stake and earn a reward via using our validator nodes.
Well, staking, perfect time to be discussing about this. So I want to get your macro thoughts on the crypto space in general, because we have the Ethereum merge happening, any day right now. So what are your thoughts at a higher level as it relates to staking for the industry and anything else in the crypto space you want to touch on?
Well, I think the Ethereum merge is probably going to be the biggest catalyst in crypto, probably ever, right? I mean, Bitcoin hasn't had any forks or merges as big as this. And this is the number 2 blockchain changing its whole consensus mechanism. NFTs, DeFi are all primarily built on Ethereum. So it's really a big event. And to the extent it goes well, and we're very optimistic it will, the inflation of Ethereum will go down. The rewards will move to validators instead of miners. So for our company, that means the rewards could substantially increase, obviously driving further revenue. But it's a greener blockchain when it's proof of stake. So it's really a great time for the industry. I mean, I wish that the overall markets were better, right? We'll see how well it's received from a price perspective, but it is a huge event within the industry.
Yeah, and to your point earlier, it's not necessarily about the value, of Ethereum or Bitcoin and so forth. It's really the technological infrastructure that has you and the industry excited. That really is the future of it, not necessarily the values of these coins.
100% agree, right? I mean, the price of, whether it's Bitcoin, Ethereum, Solana, they go up and they go down. What's most interesting is where is development occurring, right? Like where are applications getting built, where are real world use cases getting developed? And, the internet was basically a global information transfer system, and blockchains are a global, decentralized asset transfer system. And to watch things be built on top of these next generation blockchains is, huge. And watching just the amount of developers focusing on it, regardless of what happens in the price, which is talked about all the time on, fast money is not right. is not where the long-term value will be created.
Yeah, I mean, you can make the same argument about tech stocks, right? I mean, they will go up and down, but what are they producing to advance society forward is essentially the same argument. So when we think about moving forward, what's next for BTCS?
Well, our focus has always been on the infrastructure side, right? Meaning we don't want to necessarily bet a horse, right? Like, hey, I want to bet an application that's built on top of Ethereum's blockchain. We want to bet like the racetrack, right? And Ethereum could be like a racetrack. Cardano could be a racetrack, where these next generation blockchains, we're securing that infrastructure. So as long as anything is built on them, we should benefit. And if we can do that in a way to allow other people to also participate in that consensus mechanism and earn rewards, and it's really important we're doing it in a non-custodial way, right? So if you can monetize your crypto and not lend it out to like a Celsius, right? Where you monetize it, you own your private keys, and you can earn a reward through a service that we plan to provide. We think that's really powerful. So it could really drive growth for our company. And we think, that's really where the industry is going, staking versus mining.
Mm-hmm. All right, Charles, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.